In this presentation, we will use tax software to consider the data input related to interest income. We will be using Lacerte. Lacerte is owned by Intuit. Intuit is the owner of QuickBooks. The data input should be very similar or the similar type of format for other types of software as well. The data input form that we would typically be receiving may not look exactly like this in form and shape, but this is the 1099 INT. So you're going to receive typically from a bank or financial institution a 1099 INT related to investments for an individual, and that's the form that we're going to be used to enter the information. Usually you're going to have the interest income. That's going to be in line 1. That'd be pretty straightforward. We're going to enter that directly into the system. If you had something else going on like tax exempt interest that we would have to enter in for informational purposes, that could be down here in line 8. For more information about these lines, if you look at a form that says 1099 INT and you don't know why something is in a particular box, go to the IRS website or to the back of the form where you will have instructions on it, instructions laid out box by box, and you can get more information on them. So here we are in our mock return for James Smith. We have the single individual. We're going to scroll down. We've got the 100,000 down below. We have no dependents. What we're going to do now is add the interest income. So we're going to add the interest income. We have tax exempt interest here, and we have the total interest in line 2B. If we add something that's over 1,500, then we would think that we would see another schedule, Schedule B, down here being highlighted and populated. Anything under that amount, you would think then that we would only have the amount reported here on line 2B. Let's check it out. I'm going to jump to the data input form. I'm going to say that we have interest, and we're going to put into the interest line, I'm just going to call it bank 1, and then we're going to say that we had interest, let's say, of 300. Interest of 300, we're going to go back to our forms, and we'll see now that we have the interest of 300 up top in kind of like where the wages would be filled up top in our income line. Now, again, you want to think about this in terms of a tax formula. So if we were to pull out our trusty Excel worksheet, we'd say, okay, in line 1, we've got the 100,000 in W-2 wages, and now we had the interest. So we had the 100,000 in W-2 wages. I'm going to say 100,000 W-2 wages. Interest income, we just said, was for the 300. So 300 here. So just in terms of a formula, I'm going to say, all right, that should be, you would think then, the 100,300. Pulling over to page 1, there's the 100,300. I had to adjust the formula, deleted the cell for some reason. So there is that. Then we have the standard deduction, and that should bring us down to the taxable income of 88,100. So similar fashion over here. Again, we have a little bit more broken out in line. In the first page, we got the 100,000, the 300. That gives us the total of the 100,300 minus the standard deduction, which we're saying is 12,200 in this example, to get us to the 88,100. And then the second part of the return will help us to calculate the tax on it. I'm not going to get into too much detail here. We're concentrating in on the calculation of what's going to be included in the income line, focusing in on the first page. Now, what if this then goes up above 1,500? Let's say we had interest for bank 2. We're going to add another one and say bank 2, and say now we had 1,400 from bank 2. Go back to the forms, and you'll see now that this one turned black because now it's now something required in the cell in the forms. So we now have Schedule B is required because it's indicated by this software Lacerte that by turning black and being populated. So there's the 1,700 here now being supported by Schedule B. Schedule B being required because we're over the 1,500, giving more information to the IRS, breaking out the institutions here that provided the information, which then can be verified by the 1099s that we not only have, but are also provided to the IRS. So they have more information about that. And then that line, of course, breaks out and ties in to the front page of the 1040 and would be added to the 100,000 W-2 wages to bring us up to the 101,700 minus the standard deduction. That would give us that 89,500. If we did this in our worksheet over here, I would then go to our worksheet and do the similar process, and I can just enter the same data input. There's the 1,300 plus there's the 300 plus the 1,400. And then we can enter this line by line in kind of I think of a more straightforward, easier for me to look at, or at least to double check. And then if we were to add these up, it would add up to 101,700. That's the first page of our line here, minus the 12,200. I would think then that the income would be 89,500. So if we go back over here, 89,500 looks like it would be reasonable based on the information we have thus far. Now, typically in the 1099, again, it may not look exactly like this, but typically that would be a 1099 INT box 1 somehow, right? Depending on however the banks happen to format their 1099 forms. Now, if we had a box 8, 1099 form box 8, then we might have something down here. If we were to fill that out, let's go take a look at that on our data input screen and say that we had tax exempt interest of some kind. And it might be the same bank that had taxable interest and tax exempt interest, box 1 and 8 that were filled out, right? But I'm going to say that we had tax exempt interest over here, and let's say that this was 500 tax exempt interest. And then let's go back to our forms. So if we go back to our forms, what's going to populate? We have the 500 here. So now we have the information return, information being reported, but it's not included over here. Notice nothing changed to the 1,700. So if I was to enter this in our worksheet, in our straightforward worksheet where I'm just basically trying to do the calculation for the federal income tax, I'm not going to include the tax exempt interest. Why? Because it's not included in line 1, right? It's just an information thing that the IRS wants us to report just to double check that information, but it's not actually included in the tax calculation line to get to our taxable income, which is still the 89,500. So if we go back down, we're still at 89,500. Only thing that changed is this information that we're putting on there for informational purposes. So just note that you're going to have you want to basically separate those two things out, the stuff you're putting on there, because the IRS just wants to double check it that we've put it on there, we've tied into the 1099 correctly and whatnot, and they're both checking us when they do that, and they're also checking that the institution is properly recording things too, because again, they're pressuring the institution to properly report the interest income. So that's kind of a double check for us and for them. And then we're reporting and what's going to be included in the actual calculation, which of course is the taxable amount. So the non-taxable amount, we still have to report it. We still have to show it not being shown then on our system here on our actual tax calculation. For many tax individuals, for general, most individuals, the interest income probably isn't significant, right? It might be below the significance line of 1,500, might be far less than that. In that case, you'd probably just have the interest reported on 2B. And of course, in that case, the IRS isn't overly concerned with a very low amount of interest, and therefore doesn't need the added information, which would be including the Schedule B over here.